Ladies and gentlemen, welcome to this presentation. My name is Joe, and I'm here with my colleague Marco from Alta Options. We're the young and passionate team based in Boston, currently working on providing an exchange for market participants who trade listed option products on Bitcoin. And ultimately, we aim to be the most popular venue for people to trade cryptocurrency derivatives. A little bit introduction by myself. Prior to Alta Options, I previously had a working experience in investment banking, private M&A, and FX trading space, and I've had more than 6 years experience as an active equities and equities volatility options trader. Today, we'll be presenting to you why derivatives are so vital to cryptocurrency market as a whole. And this time, you will be able to learn what is an option and why it is so important and how to use it. Now, today's topic, why derivatives are vital to cryptocurrency market. In order to answer this question, we first have to take a quick look at the current state of the market. The recent market trend since early 2014 can be pretty much summarized into one phrase: the never-ending downward trend. And we think this is caused by the following issues. First, the oversupply of mining powers fueled by the arms race among various mining companies across the globe. And secondly, the continuous liquidation from mining facilities as well as payment processors. And third, but not the least, lack of consumer adoptions from the most fundamental level. Especially, we think the arms race has gone way too far for mining facilities in this space, and a whopping 40 folds increase in the total difficulty level for the network from just over 1.5 billion at the very beginning of this year. Now we have about 42 billion for the difficulty level. This all happened just under a year. And consequently, a handful of venture-backed mining firms went under the water. And some of those names you might be really familiar with, such as Cointerra, recently filed Chapter 7 bankruptcy, and Hashfast, they filed bankruptcy auction, and another firm filed bankruptcy this week. So, during the interview session with the previously popular cloud mining firm who allegedly suspended their service, Sex.io, they responded as, our decision is based on the fact that we pay for the maintenance in US dollars and mine Bitcoins. And if you do the math, you will see with the next mining difficulty rises, the maintenance cost will be greater than the profit from mining. And I think, or Alta Options think, that could be the fundamental problem of the market. And that's what put the downward pressure on the price. So just like when internet was created first, very much venture and smart capital had flew into the market, helping the new revolutionary technology build its most basic infrastructure from ground up. Mining facilities are very similar in the sense of how companies are receiving their investments. Knowingly being late into the market, lots of players still jumped into this very crowded market because extremely high potential return on the assets. The competition has never been as intense as the current state for the entire space. Bitcoin price has dropped because of the continuous liquidation by mining facilities and front loaders and payment processors. Those intense and large block transactions are the two driving forces behind the current price, as well as the volatility. Because some exchanges just simply don't have the liquidity to handle that much. And also, as he mentioned, maintenance costs are just too high. No profit can be made. Heck, I was losing a lot of money by owning GigHash from Sex. Even worse, I sold all my GigaHash, and because I had additional hashing power from referrals, I was still losing money. So we at Alt Options are currently aiming to present an innovative way for you guys, including mining companies, to insure against and capitalize on the underlying assets volatility. Which brings to the next topic. What is derivative and why derivatives? People use derivative products to hedge the risk, generate an income stream, ride with volatility of the market, and express their opinion on the market through different types of positions. The international Bitcoin markets have a variety of participants, including general consumers, sophisticated investors, retail and professional traders, venture capitalists, hedge funds, and even the government. And in the hands of knowledgeable investors, derivatives can derive profit from 1. Changes in mining speed. Secondly, Bitcoin spot and future price movement. Third, currency exchange rate shifts. And fourth, changes in global Bitcoin policy and regulatory environment. Adding some of the whole and wide variety of derivative products available to a player in the market can provide a better diversification in financial instruments in Bitcoin price, help hedge against sudden price fluctuation, as well as opportunity cost of holding the assets. So you guys might be wondering, what is a derivative product? A derivative product typically refers to a complex financial contract that is derived from the underlying assets, and that could be the price movement, the ownership, future price, or even volatility. There are many types of financial contracts out there, and among those, the most popular ones are options and future contracts. And in the following slides, we will be focusing on options. So you might also be wondering, what is an option? And how could that even help the market? So what I often like to think an option is like a pizza coupon. Because similarly, pizza coupon, just like options, it gives you the right to buy the pizza at a specific price before the pizza coupon expires. For example, in this case, this pizza shop is currently offering a pizza coupon. Assume I am the owner of this small cheese pizza coupon, where you can buy a free cheese pizza for $10. I'm sorry, excuse me. You can get a free cheese pizza, and currently this cheese pizza is worth $10 at the market rate. So the question is, how much are you willing to buy this coupon from me? Probably some price between $0 to $10, correct? Now, if we change the situation, let's assume all the other restaurants are closed due to an unexpected terrorist attack, and the current price of one small cheese pizza skyrocketed because the supply and demand unbalance. And this time, how much are you willing to pay for this pizza coupon? The willingness to pay is probably higher than $10, and somewhere between $10 to $50, depends on how urgent or how much you want that cheese pizza. But anyway, so an option, in short, is just a contract. It gives the buyers the right, but not an obligation, to buy and sell the contract on or before a set date. And because options provide a variety of benefits, which is why we're saying market is always sunny when you have options. So why exactly are exchange traded options so popular? So exchange traded options first started trading back in 1973, but over the past decade, the popularity of options has grown in leaps and bounds. According to data compiled by the Options Industry Council, the total volume of option contracts traded on U.S. exchanges in 1999 was about 507 million. And by 2007, the number has grown to an all-time record to more than 3 billion contracts. So why are they so popular? Because there are four primary benefits of using options. The first one is the cost efficiency. Options have great leveraging power. As such, an investor can obtain an option position that mimic a Bitcoin position almost identically, but at a huge cost savings. For example, in order to purchase 200 Bitcoins, an investor must pay out $44,000 at a rate of 220 per coin. However, if the investor were to purchase two $220 call, with each contract representing one coin, the total outlay would just be $4,000. 200 contracts times one coin per contract times $20 market price for the contract. The investor would then have additional $40,000 to use at his or her discretion. Secondly, less risk, depending on how you use it. So there are situations in which buying options is riskier than owning Bitcoin, but there are also times when options can be used to reduce the risk. It really depends on how you use them. So options can be less risky for investors because they require very minimum financial commitment than Bitcoin itself, because you do not have to own the underlying assets. And options are also the most dependable form of hedge, and this also makes them safer than owning actual Bitcoins when you are owning them. Third, higher potential returns. You do not need a calculator to figure out, if you spend much less money and make more than the profit expected, you will higher percentage return. With that leverage, you'll be able to generate more profits. And fourth, the more strategic alternatives. The final major advantage of options is that they offer more investment alternatives. Options are a very flexible tool. For example, Bitcoin mining firms, instead of selling their coins on OTC markets or exchanges, giving up the potential upside, they can generate steady income by collecting premiums from the options that they already own. Now, introducing to you Alt Options. So who are we? We're a financial service company that offers a venue for you guys to trade virtual currency derivatives. Our long-term goal is to increase liquidity in this space by allowing individuals and companies to hedge and speculate efficiently, and eventually utilize virtual currency to connect global financial markets. And we're trying to solve these three problems that we currently have for the market. First, extreme volatility. Secondly, very low liquidity. And third, very low return from trading spot positions. And we are here to offer a solution. By creating a liquid derivative marketplace, connecting you with market makers, mining firms, hedge funds, and institutional liquidities, along with our pricing algorithm and robust trading platform. And if your mining company, buy-side firms, you can generate steady monthly income, higher alpha. If you're individual investors, we'll be able to provide higher leverage, easy to roll over managed strategies, and zero exposure in online. And if you're a payment processor, you can utilize options to hedge your risks and to be more cost effective. And lastly, this is a demo of our platform. You got Bitcoin options? If you want to trade them, come to altoptions.com. Thank you very much for your time. Bye bye.